Welcome to Granite Research's Management Interview Series. Today's hosts are JP Geygan and Rob McGuire, analysts covering LSB Industries. Investment research can be downloaded at www.granite-research.com. We're pleased to be joined by Mark Behrman, CEO of LSB Industries, NYSE ticker symbol LXU. LSB engages in the manufacture, marketing, and sale of chemical products for use in agricultural, industrial, and mining markets. LSB owns and operates 3 chemical manufacturing facilities that primarily produce ammonia and ammonia-based products.
Mark, thank you for taking time to speak with us today.
Thank you, guys. Appreciate it.
For investors who might not be familiar with the business, can you begin by describing what LSB Industries does and the company's evolution over the past few years?
Yeah, JP, we are a nitrogen chemical manufacturer. We've got 3 integrated sites, one in Pryor, Oklahoma, which is outside of Tulsa, another one in Cherokee, Alabama, which is in northwest Alabama, and our 3rd and largest facility is in El Dorado, Arkansas, which is in southwest Arkansas, not too far from the Louisiana border. These sites all start with natural gas, upgrade natural gas to ammonia, and then we either sell ammonia or upgrade it to numerous other products. About 50% of our products are sold as fertilizer. So whether it's ammonia, UAN, or ammonium nitrate, and then the other 50% of our products go into either industrial applications or mining applications. So we like that diversification. Definitely protects our downside a little bit, but we still have a pretty significant upside when ag markets really get into a roaring cycle, as they're really starting to do right now. The sites are really logistically advantaged, all of them. Most of our product goes out either by truck or rail, but we do have an opportunity to barge out of our Cherokee, Alabama facility as it sits on the Tennessee River. Ammonia, the New Star ammonia pipeline, which is how a lot of ammonia is moved, particularly up from the Gulf into the Corn Belt, runs right through our El Dorado, Arkansas facility. So we have the ability to inject into that pipeline, and we do that every day. And then our Pryor, Oklahoma facility sits in the Southern Plains market, which is actually a really good market for us when selling some of our products.
Mark, top of mind for many investors is the recent dramatic rise in prices for ammonia-based fertilizers over the course of 2021. Can you discuss the pricing environment, particularly the timing and magnitude of recent price movements?
Sure. So, if any of you really focus on or followed fertilizer prices over the last several years, it's been a really low price environment since 2018. 2018 in the fall, we started to have some really bad weather, unprecedented bad weather. Why that's important is the fall of 18, or that fall, in that particular fall, we weren't able as an industry, farmers really weren't able to put down ammonia, which usually gets applied in the fall after the harvest. So that it actually sits there and nitrogenates the ground all winter. A lack of demand for ammonia going into the ground meant that ammonia inventory built up. Spring of 19 had a lot of really bad weather. It was a very late harvest. Some unprecedented weather really caused, as I said, that delayed harvest, which really meant that farmers ultimately put down less ammonia into the ground as they wanted to get corn planted, primarily corn anyhow, planted quickly, or they would miss the season. Again, another round of ammonia buildup. We did see some better application in 19, and certainly last year we saw some pretty good application. But a lot of ammonia, UAN, and urea buildup throughout the system really put pressure on pricing, right? More supply than demand. Recently, though, and started, really maybe November or December of last year, we started to see prices rise. And when you think about fertilizer prices, corn being the biggest crop that uses nitrogen fertilizer, really, you got to start off by thinking about corn prices, because corn prices really drive fertilizer prices. So there's a number of dynamics that are going on now that have really pushed corn prices from, I would say, the low $3 range to what's now solidly over $5. First off, we had a lot of demand from China. And why is that important? And why is that really occurring? So China has a big swine population, but they had a swine flu that went through over the last year or so that destroyed over 1/3 of their population. And so in order to build that back up, they've got to repopulate. Interestingly, though, as they're doing that, they're really institutionalizing, hog farming. Prior to all of this, there were a lot of hog farms that were mom and pops, maybe 3 to 10 hogs on a couple of acres of property. They fed them table scraps, and corn demand was probably certainly less than it is today. Now that they're repopulating, they're putting in commercial operations for swine farming. And what that means is, pretty comparable to here in the States, multi-layer operations, hundreds or thousands of swine in one location, and certainly feeding them better. So corn is the feed that they're using to feed them. So a lot of demand as that swine population is really built back up and repopulated. In addition to that, ethanol is a big user of corn, probably uses about 40% of all corn grown here in the United States. Clearly, the pandemic has had, an impact on stay at home since it started, and less driving, which ethanol is an additive to gasoline. So it's had a really big impact on ethanol production and therefore demand for corn. As we've really got back to some level of normalcy and really reopened the economy here in the U.S., and with vaccines, rolling out and becoming more prevalent, and the penetration or the number of people being vaccinated has really started to increase, we've seen a lot more driving. So you're starting to see ethanol production dramatically increase. Don't know if it's really back to pre-pandemic levels, but it's risen pretty dramatically. And so you're seeing corn demand pick up there as well. I'd say the last thing is, so corn's not the only crop where we've seen significant demand increases. We've seen that with soybeans as well. And again, those are the two major crops in the United States that we grow. So there's a finite number of acres in the United States. So there is a competition to some degree in those acres between beans and corn. The price of beans relative to the price of corn was significantly higher. And if farmers wanted to be able to plant corn, the market had to demand a higher price for that. And so that caused some increase in pressure on pricing as well, as there's a competition for acres. So, when corn sits at prices today, you're going to see fertilizer prices really dramatically increase as the farmer is less price sensitive, because the farmer income last year and expected for this year is probably the highest income that they've seen since 2014. So, when you think about just the general feeling about fertilizer prices, farmer is definitely less price sensitive. When you take a step back and think about fertilizers, ammonia, UAN, and urea, there's a lot of impacts. They're really global products. So we've seen less imports into the United States. Part of that is prices were pretty low in the fall time. And so once we start to get to winter, imports coming in really don't have an opportunity to use our waterways to get up into the Corn Belt. The river systems are frozen. And so the product generally gets here too late if they wait until spring. We've also seen a dramatic number of plant closures or outages throughout the world. So I think everyone's pretty familiar with the unprecedented cold weather that we had back in February, that really had an impact on a number of the ammonia plants here throughout the United States. But we've also had a number of plant outages or unplanned plant outages throughout the world. So we've seen a lot of supply come out of the system, coupled with some of the other things I talked about as far as corn prices, on top of some increase in expected acres planted, has really caused a dramatic increase in fertilizer prices for the spring.
So, Mark, that was helpful on the agricultural side. Just shifting gears, your industrial and mining end markets are recovering after COVID-19 disruptions dampened demand in 2020. Can you tell us how activity and demand today compare to pre-pandemic levels?
Sure. So when you think about our industrial business, the main product that we sell is nitric acid. And nitric acid has a lot of end market applications, but the largest end market application is polyurethane. Polyurethane goes into a lot of things, automobiles, white goods, a lot of other applications, but the auto industry is a really big user. So using that as an example, we saw auto sales and demand for cars drop off really dramatically at the beginning of the pandemic. What we've seen throughout the pandemic is that demand really lifting. Last I saw, I'd say February results for automobile sales and automobile production are right back at pre-pandemic levels. And so we feel really good about the demand that we're seeing for nitric acid. Some of our other products are pretty similar. I don't know that they're quite back at pre-pandemic levels, but they've come back pretty dramatically. On the mining side of our business, I think one of the, we've talked about previously the drop off in the coal markets. And 4 years ago or so, we were still selling a lot of our product that found its way into the coal markets, and we were probably levered 50-60% to the coal markets. Today, by design, we're less than 5%. So we're really more dependent on the precious metals markets or the quarry and construction markets. And we're seeing some really interesting dynamics there as copper prices have been at some all-time highs. And so therefore, copper demand and copper mining has really taken off, which has been good for the demand for our products. Additionally to that, we've seen some pickup in infrastructure build. And obviously, the current administration is talking about, significant infrastructure funding to fund a lot of infrastructure build. And so that would only positively impact our business.
The Magellan Pipeline, which stretched from northern Texas and Oklahoma through Kansas, Missouri, Iowa, and into southern Minnesota, was decommissioned in late 2019. Can you discuss the impact of this closure on the Southern Plains market, where you sell most of your agricultural products?
Yeah, so it's really, that pipeline is an ammonia pipeline, JP, and it was primarily used by three of our competitors to move ammonia from facilities in Texas and Oklahoma up into the markets in the areas that you just mentioned. With the closure of that pipeline, those three facilities really had to rethink how they were moving ammonia and how they were storing ammonia. And so what it has tended to do since the closure is to really put pressure on ammonia prices in the Southern Plains market as our competitors really work out the distribution and the logistics of the excess ammonia that they have now, as they don't have the same logistical asset to really move that. So, for instance, Koch Industries owns a plant in Enid, Oklahoma, and they've publicly announced that they're going to spend capital to increase their urea production so that they can actually upgrade ammonia to more urea and sell urea into the marketplace. CF Industries, which owns the Verdigris plant, has talked about an alternative distribution strategy to alleviate the pressure in the Southern Plains market. And then Agrium, which owns that third facility, or Nutrien today, has talked about increasing their storage capacity down at their plant in Borger, Texas. So all of that should, eventually push us to a more normalized level of supply in that area and help increase prices in the Southern Plains market.
Your 2021 guidance reflects increased sales volumes, partially attributable to recent contract wins. Can you talk about these new contracts and what investors should expect as they ramp up?
Yeah, so we've announced one large contract, and it's a 7-year contract for the sale of nitric acid to a big global chemical customer that we sell acid to directly. It's about 70 to 100,000 tons a year. The reason that we've got a range like that is it is dependent on their turnarounds of their plants and therefore the demand that they would pull in any given year. We're excited about that. Nitric acid is a really good product and has really good margins for us. But in order to execute on that contract, we needed to expand our rail loading capability and our storage capability. And so there was an investment on our part, but the return is a really high level return for us. So we were really happy with that. We've increased fertilizer storage in several locations. Why is that meaningful? In order to, for us or any of our competitors, we want to run all of our plants full out all the time. And you get the best economics that way because you spread out your fixed cost over, a larger amount of tons and increase your product price per ton. So, in the winter months, when it's really much slower, you've really got two choices: continue to produce and store the product, or ultimately turn down the production levels of your plants if you run out of storage or the ability to sell your product. So increasing our storage now gives us the capability where in previous years, we might have turned down our production during summer months or late summer months or early fall months. We now can produce and store that product. So not only are we getting more production, but we could actually hold on to that product until better points in the season so we can get higher prices. So those would be two products or projects that come to mind.
Green ammonia has emerged as a favored medium for delivering carbon-free energy. Where will LSB fit into this new market?
Yeah, it's a great question. Decarbonization is a hot topic globally. I think in previous green cycles, there was a lot of talk about, decarbonizing and going green, but we didn't have the momentum that we have today. A lot of that had to do with alternative energy versus natural gas. Natural gas prices at those points were significantly higher than they are today. Today, it's not about alternative fuels per se. It's really about climate issues, sustainability, and decarbonization. So when you really think about the marketplace today, we can lower carbon in our products by producing blue ammonia. So that would be low carbon ammonia by capturing our carbon and sequestering it. Or we can produce no carbon ammonia, which would be green ammonia. More than likely, blue ammonia will have a place through this journey, but ultimately the market's looking for no carbon hydrogen and no carbon ammonia. Ammonia can be used really as a direct fuel source. It can be used as a carrier for hydrogen, a carrier and really storage medium for hydrogen. And when you think about ammonia plants aren't easy to run. Ammonia is a hazardous material. It's not easy to handle, to store, to ship. So in my opinion, the early adopters and the early producers of green ammonia should be, and the likely candidates are, folks like us, ammonia producers that really understand how to take advantage of the distribution channels, the storage capabilities, understand the technology, and understand how to operate the plants efficiently. And so we intend to develop a strategy to take advantage of that. Ultimately, I believe that green ammonia will be a staple. It'll be something that's required by the marketplace. And I can't tell you the time frame. I don't think anyone can tell you the time frame. But we intend to play a part in that.
Turning to your capital structure, the call premium on your 9 5/8 senior secured notes due 2023 drops from 107.2 to 103.6 on May 1st of this year. Considering the current credit environment, which is favorable to issuers, what are you thinking in terms of refinancing this debt and potentially making other changes to your capital structure?
JP, we certainly have talked about lowering our cost of capital. So you're right. The credit markets today are pretty advantageous for issuers to take advantage of low rates and favorable terms. So we'll definitely take a look at accessing that marketplace and taking advantage of the current market conditions to lower the rate on our debt. From the rest of the capital structure, and namely the preferred, I think we've been pretty public that there are opportunities. There will be opportunities for us to chip away at that preferred, and I think that's the intention is to start to do that with fertilizer prices and ammonia prices at levels that they are today, and hopefully expected to stay above where they were the last few years, even in the second half of this year. I'd like to think that we're going to generate some free cash flow, and we can use that to start to redeem some preferred. We may, with higher levels of financial performance, as we refi, we may be able to increase our debt level a little bit and use some of those proceeds to redeem some preferred. I want to be careful in saying that only because I think what's really important is for us to have a proper capital structure for our company. So not to be too levered, so that we can actually have flexibility to go out and either invest capital internally to organically grow or invest capital externally to look at acquisitions of other assets or other companies.
Mark, you previously discussed your desire to leverage your operating platform to grow the business inorganically. What would that look like?
Oh, that's a great question. If I had a crystal ball, I'd love to be able to just kind of sketch it out. We've, as I said earlier in the conversation, we've got several parts of our business. So we do sell fertilizer. So we absolutely would look to acquire or merge with other fertilizer, either acquire assets or merge with other companies or acquire other companies. So that would be a natural fit for us. We would also look to expand on the industrial side. So if there were opportunities for us to either acquire nitric acid assets or partner with folks to maybe build a new nitric acid plant to support a long-term offtake agreement, we absolutely would consider that. We have a small sulfuric acid business. Obviously, that's not nitrogen-based, but it's a small profitable business for us. We understand that business. So it's clearly something that we could look to expand given an opportunity to acquire assets that we thought would be complementary to what we have today. And then I said, I would say we would also look at other products that we don't produce today, but maybe have similar customers. So we would have opportunity to sell additional products to a current customer base, or there's some overlap in application. So again, there's some continuation of a process that we currently do, or a customer that we have, so it would be complementary to what we do today.
Mark, thank you again for your time today. We look forward to watching the business continue to develop.
Great. Thanks so much, guys.
Research coverage for LSB Industries is provided by Granite Research. Granite Research is a subsidiary of Global Value Investment Corp., an SEC-registered investment advisor. Investors can access research publications and additional information on Granite Research's website, www.granite-research.com.